how to beat the market during a market crash is potentially what could happen. I don't know if it is, but it could happen, and how to win, how I'm winning today, analyzing a great stock, finding a great stock, finding a way to make money even if the market goes down, finding a way to make money if the market goes up. In fact, I want the market to go down. The more it goes down, the more money I make. And I'm not short in the market. I'm not doing options. I'm going to explain all of that in this live show. I'm going to share with you my real money, my real trades, deep dive analysis into the stock, or I should say the business that I've earned and bought, and I'm now regarded as a whale. And in fact, I have out of 47 institutions and hedge funds, out of 47, I'm 32 on the list. Warren Buffett is number one with 400,000 shares of this business. I'm going to share with you my real trades that I've done today, how I'm winning, how I'm beating the market, and how you can do the same thing. I want to offer support and encouragement. This is not doom and gloom. I've seen people in the chat preparing for this live stream saying, oh, this channel's become like everybody else's, doom and gloom, trying to sell videos. It's not. This is not a video. I'm going live and I'm showing you my real shares, my real positions. And even though I'm saying that we could have a crash, and it's very likely, you can still make money. In fact, more people make money in downturns and in wars and depressions than any other time. You just have to understand how this works. Okay, so let's get straight into it. A very deep dive today. If you are not able or don't want to watch for the entire duration of this live stream, turn it off now. I mean it. Turn it off now. This is not for you. This is for those that want to study the detail. This is a very disciplined, very focused, very convicted trade that I'm doing. I've got $600,000 invested. Over $500,000 on the way to $1 million. I'm ranking, as I say, number 32 out of 47 institutions. This requires discipline, work, and study. But if you put the time in, you can make money. This is not for those that want to get rich in 5 minutes. I recommend strongly that you turn this off and you don't pay any attention to this at all. This is not financial information. This is not financial advice. This is what I am doing with my real money. So by now, hopefully you've tapped the like button. If I could just take a moment to ask everyone to tap the like button, that would be great. Thank you very much. And consider subscribing. We're also giving an opportunity to win up to $3,000 of my own hard-earned money. I'm going to give away to you at least $2,000. It could reach $3,000. I'll explain that later in the live stream. If you last to the end, you'll be rewarded with the chance to win. A very good chance, actually. Hardly anyone has taken part out of 100,000 subscribers. So let's get into it. By now, hopefully you've all tapped the like button and you've all considered subscribing. So what we're talking about today, and this is my real life trades, my real money, my real positions, I'll share it with you. I've traded about 100 grand today and I've made money, as you can see, and I've improved my position. Now, let me explain what this is and what this isn't. The nature of the game, if you are an investor, and you do trade along the journey, but ultimately you are an investor, is to find great businesses, great assets. It can be an asset too, great businesses or great assets that are undervalued. Buy them with conviction. It's not dollar cost averaging. It's buying with conviction. And it's not about making profit today. It's about building a position. This is something that a lot of people forget. They're all trying to make profit every 5 minutes. What I'm trying to do is build a position. I'm trying to build a foundation, a portfolio I can sleep on for the next 10 years and be up consistently and beat the market and never have to worry if the market crashes. I'm building a position, and my aim and my focus is to achieve more and more shares of the business that I want at lower and lower prices without ever paying tax and without ever losing money. The profit will come in the end. So The first thing we have to do is understand how tax lot trading works. Most people do not understand that. They will buy shares and they will sell them, and they won't really know if they're winning or losing because they're not doing lot selling, lot trading. They're just buying and selling, and they don't know their tax position until they're presented with a tax bill. You have to understand every part of this. This is why I said if this is not for you, details like this, turn off, go outside and play football. This is not for you. Okay, so let me show you what I've been doing. This is my real trades, my real money. This is my real portfolio. Despite the S&P selling off today, and it's been down now for the week. I'll show you. And I was all in on the S&P. You can see now we're down a 0.25% on the week. If we look at the month, we're up 3.81, but we are turning down now. You can see it's the beginning of what I think could be an almighty crash. Okay, I think it's already begun. No one has noticed. We're getting massive amounts of peaking now on overbought stock. Anyway, so you can see today and the week, it's down. I was all in on the S&P and I sold it all and I bought Coca-Cola. And let me show you my trades today, and then I'll explain the details of why I bought this business. All right, so this is my actual portfolio and this is my actual position. You can see now I have 7,460 shares in my main account, and I have another 700 or 800 in the Roth IRA. So here in the main account, I've got 491,000, and in my Roth IRA, I've got about 50,000. So around about the $440,000 I've got now. By the end of the day, I could have $600,000, and you never know, I might get to $1 million very quickly with this strategy. Now, you may remember this morning, my average was around about 66. Was it 66.48, 66.50? Well, now it's 66.38. It's coming down all the time. Only a week ago, it was 67.68. So it's coming down dramatically as I acquire more and more. If I scroll down and show you my position, you will see here how I've been trading today. Scroll down a bit further. Here we go. Just coming into it now. There you go. You can see these trades, 25 grand in, 45 grand in, 50 grand out, 70 grand out. So in the last few minutes, this was just a few minutes ago, I traded $70,000. All right. I'm doing that in and out now regularly. So you're going to see on live on the show $1 million trade sooner than you think. So what I've been doing is selling as it popped up using tax lots, specific lots to sell and return those shares to the shop, if you like, taking those shares back to the bank and swapping them for the shares lower down. Now, just like everybody else, I don't have unlimited money. I've borrowed about a $250,000 on margin, and I've got 600 grand invested in total. But at the end of the day, I don't have unlimited money. I started with $5,000. I don't do options or shorts. I do it all by owning the business and simply using tax lot trading. So I've been trading all day to improve my position. So on the way down, I've been buying more and more and more. And as I go down, I start to double and double. And I buy with more conviction on the way down. Of course I do, because the stock is getting cheaper and cheaper and cheaper. And as it goes up, today, literally at the side of the swimming pool, when I was swimming, I was doing some water aerobics today. I did a $70,000 trade. I sold as it popped up. As it got to here, right here on Coca-Cola, I sold. Now, when I sold, I didn't actually sell for a profit. I didn't sell for a loss. I just got my money back. And then as it started to dip, went back down here again, I bought again. So what I did is I bought up here. I originally owned up here, but this morning I was able to buy here at the bottom. Okay, so I bought the shares down here and I kept doubling and doubling and buying more and more. So the shares down here are more appealing to me because these shares at the bottom protect my portfolio, allow me as collateral to buy more. I can borrow against them, and these obviously ultimately will give me a much more profit and gain in the future. Hang on a minute, what happened there? How did that happen? That was weird. My YouTube started to play on my phone. Very strange. Anyway, so later on in the day, as I was buying up here and then all the way down, we got up to here. And when we got up to here, I started to sell. So I sold some around the 66.06. Again, they were complete washes. There was no profit. There was no loss. It was just swapping for what I won here, down here at the bottom. At that point, my average went up because I was selling shares that were going up rather than shares that were going down. My average did actually go up. And you might go, well, why would it go up? You've got shares higher up, but I've got a lot more higher up. And because I took some out here, it made the average go up for a few seconds by a couple of cents. And then when it started going down again, it didn't have to go down here. It just had to be below these prices. I started buying more. And as you can see, I bought more and now it's going up faster than ever again. So I'm gaining more and more at lower and lower prices. Okay, now then, that's how tax lots work. So you don't pay tax, you don't lose money, you're simply acquiring more and more, and ultimately, you can see my average has come down and down and down. Now, we are down 8% on Coca-Cola over the last year. If I go to the 1 year, you will see, in fact, more than that now. Look at that, 8.5%. And this morning, we were down over 9%. 9% since the high earlier on in the year. 9% down, okay? So it's pretty good, if you think about it, that I am only down 0.72. This is what I'm doing. I'm building a position, preparing for the crash. When all others are buying and buying and buying and ignoring everything, they just keep buying and buying and buying and paying 1,000 times earnings on things like Palantir. I'm just not paying any attention. I'm just chiseling away and tax lot selling. Now, this requires huge amounts of discipline. I've been staring at my screens all day. And if it pops up again now, I will, and if it goes over 66.8, I will start selling some of those and I'll buy it again. Now, you might say, what happens if it carries on running? Doesn't matter. I win if it goes up and I win if it goes down because I've got too much. I don't need $600,000 of Coca-Cola. I mean, literally, I am now regarded as a retail whale on Coca-Cola, and I'm also 32 in the world on institutions that own Coca-Cola. I'm not an institution, but I own as much as institutions at number 32 out of 47 that own shares in Coca-Cola. So I don't need to be that much in. I want to have a diverse portfolio. So if it runs up after I sell, it doesn't matter. What I'm trying to do is own more and more shares at a lower level. Then I can move on and I can leave that portfolio alone. So hopefully by now you all understand how tax lots work. But now we're going to go into a deep dive of why I'm actually buying Coca-Cola, why I'm buying this particular business at this particular time. And if you see here, look, my portfolio, my all-time was 292. I'm now at 200 and nearly 90. So I'm nearly at an all-time high, considering I lost on XRP, Bitcoin, and Ethereum, and I lost and the S&P has been coming down. So I think you'll agree I've done very well, considering that Coca-Cola keeps going down. When it starts to turn up, I'm going to be in a great position. So let me now do a deep dive for you on Coca-Cola and why I've bought this, because we are at the edge of a precipice. There is a very good chance of a crash. We are 200% over GDP on the valuation of the stock market. If you don't understand that, I did it in this morning's show. Go and check that out. I explained that, spent half an hour explaining that. We have never been in a worse position. Way worse than the dot-com crash, way worse than the housing crisis, way worse than COVID. That's how bad and how overinflated the stock market is. So if you're not preparing for a downturn, then you've no business being in the stock market. You really haven't. So let me now go into a deep dive on Coca-Cola. Hopefully by now you've all tapped the like buttons. Everyone done that? Hopefully you have. How many people are watching? 299. Not many people will watch this because it's not about XRP going to the moon or something like that. It's a real structure, and these videos do not get big numbers, but that's fine. I'm doing it for my own trading, and I'm just sharing you my story. So thank you very much for liking, and thank you for subscribing. So let's go into a deep dive. Here we go. Why I bought this business. Now, I want to thank Sensei's wife. This is Sensei's newsletter, but Sensei's wife does the amazing artwork. That's supposed to be me. Maybe she doesn't do that great a job. I don't know. It looks nothing like me. Maybe it does. Maybe it's a better version of me. Who knows? But that's supposed to be me, apparently. Yeah, whatever. Looks nothing like me. Anyway, let's get straight to it. So a deep dive on Coca-Cola. Now, in this thumbnail, as we shared on the screen, we've got lots of titles here. Coca-Cola Dividend Saloon. Now, there's no point earning dividends if you are in a stock that's going down more than the dividends. Remember, the dividends is just the same way as selling the shares, really. It's just profit being paid out to the shareholder. You could do the same thing by the stock going up and then selling. This is exactly the same, and you will pay tax on it unless it's on your IRA. Sugar taxes. What's all that about? FX headwinds. Indeed. Global marketing. World Cup, Olympics coming up. Costa is being sold for a loss. Holders earning zero sugar. And we've got new taste around the corner. And Coca-Cola is also now going into the alcohol business. Anyway, let's go straight into this and see what we've got. Now, if you want our newsletter, hopefully by now you have it. I've just given you the link in the chat. I'll give it to you again. If you get this, you can win free tickets to our $2,000 minimum giveaway. It could be $3,000 if everyone gets involved. There it is, and you can get free tickets by getting our newsletter for free. You don't have to pay for the premium service. You get tickets for free, but if you want to sign up for it, most people do. It's 30 cents a day, and you can follow along with the show notes for this presentation as I bring this to you now. All right. And so let's start. So Coca-Cola is the world's largest non-alcoholic beverage company with over 200 brands in more than 200 countries. Now that's important. So then you have a diverse portfolio because Coca-Cola has many businesses all over the world. You are able to benefit from market volatility, up and down, so not always benefit, from the whole world. So it's a way to buy a global brand that can have exposure to the whole world. And it's not just Coca-Cola. You don't buy Coca-Cola because you like Coke. I do, but that's not why I buy Coca-Cola. It's for the brands, and you'd be amazed at all the different things that you buy every single day that are owned by Coca-Cola. So 200 brands. How many businesses can say that? The company operates a franchise bottling model. Now that's important. People think it's a bottling business. It is, but it's a franchise model. It's very much like McDonald's. McDonald's is not a burger business, it's a land business. And people make money by paying franchise fees to Coca-Cola like McDonald's, right? It's great. Very profitable business. This is why I often say that these stocks, Coca-Cola and McDonald's, move together. They are very similar in that respect. Coca-Cola sells concentrates and syrups, while bottling partners handle manufacturing, packaging, and distribution. So essentially, you've got a cash cow. You've got the brand and the name. Everybody wants the secret sauce. Everybody wants the brand and the name. That's it. That's it. Makes it very, very, very profitable. They do not have to build factories all over the world. They let others do that and pay the privilege to put Coca-Cola on the signage on the outside. This is why I like Coca-Cola. By now, hopefully, you're understanding a bit more of the business and go, I get it. I understand why he wants it. In a downturn, it's the way to go. And Warren Buffett knew that years ago. So this capital light approach gives Coca-Cola consistently strong margins and cash flow. Now, in a time when markets are oversold and we are struggling with valuations, A company that has a huge moat, that's what a moat is. When your margins are like this, you will always make money and they can always return it to the shareholder. This is what makes this the perfect business. This is why you can be all in on one stock. Now, I'm not recommend anyone doing this or following me, but this is what's going to give me $100,000 profit by the end of the year. 100%. I've got no doubt about it. All right. It's also one of the most reliable dividend payers on Wall Street, if not the most reliable. A dividend king with 63 consecutive years of increases. Think about that for a minute. 63 years, the management have been able to increase their dividend payout to its shareholders. If you ever wanted a business where you actually own the business and get rewarded by owning the business, not just will the share price go up, the actual business, then this is the business for you. This is why when I think the S&P is overbought and I've made so much money on it as I have this year, it's time to trim. I just look towards Coca-Cola and I own as much of it as possible. Now, I'd like to get $1 million of Coca-Cola. That would be fantastic. I'd earn thousands of dollars a month then in dividends without ever having to sell a thing. And right now we're oversold. So there you go. In February, Coca-Cola raised its quarterly dividend to 51 cents per share, or $2.04 annualized. Coca-Cola Investor Relations. So I'm actually earning now about $1,400 a month now. They pay me quarterly, but a month. Now, even using my margin of $250,000, I'm actually making a profit after I pay my margin cost of borrowing. Because remember, I'm not borrowing on everything I own. I've got money of my own invested. So it's only about 50%. So even if I borrow $250,000 or 300,000, third of a million, I'm still making a profit on the dividends. So the fact it's oversold and the S&P, it's undersold, undervalued, oversold, and the S&P is overbought and overvalued. It allows me to benefit from the growth that will come, plus the dividends I'm going to get. So Coca-Cola reported Q2 results in July. Now, we covered it live, as we always do. Important. Organic revenue rose 5%, driven by pricing and product mix. So why are we down? It's beaten on earnings, 5% growth. Why on earth are we selling off? Well, because people use Coca-Cola as a cash cow, because some people bought this when it was pennies. All right, Warren Buffett certainly did. You can trim off the top, and people trim all the time. People like me trim all the time. I'm accumulating more, and I'm building up a position, but I've traded 70 grand just today. And I'll be buying back 100 grand probably by the end of the day. So I'm all the time trimming to own more and more of it. Okay. So people take profit and then they buy tech. Now, tech has got overbought. Eventually they'll sell tech and they'll come back to Coca-Cola, as they always do. So EPS came in at 0.88. This is earnings per share, up 58% year over year. What a great time to buy a business that's performing like this, that's oversold, right? Though boosted by one-time items, comparable EPS was up 4%, just so you understand the whole story. Operating margin expanded 34% despite currency headwinds. That's a great number. Coke Zero was a standout, posting double-digit volume growth. Now, some people have said Coca-Cola is going to fail because people don't drink soft drinks anymore, don't drink sugary drinks. Well, their number one seller is Coke Zero right now. So people are buying Coca-Cola. I drink Coke Zero. In my glass right now is Coke Zero. So I drink that. Now then, also, if you are concerned with sugary drinks, right now there's an uptick. Over the last few years, sugary drinks were starting to go down and people were going, oh, I don't want sugary drinks. Warren Buffett knew it and I knew it. People go through fads. They'll always come back because they love the flavour, they love the taste, but they also love the brand. We all want to buy, at times to time, a can of Coke. It's just the way it is. It's very American, and all around the world, people just turn to a can of Coke or a bottle of Coke from time to time. That's never going to change. So, CEO James Quincy said the system is focused and flexible and remains confident about delivering on full year 2025 guidance. That's from Investor Relations at Coca-Cola. So we've got a good growth plan this year despite the stock being sold off. Upcoming dates and events to watch. October the 1st, dividend payment is the dividend payout date. I'm going to be receiving about $1,100 this month on the 1st of October, but next quarter I'm up to about $1,400. I'm hoping to get to $2,000 on the next quarter. Sorry, hang on, let me just rephrase that. I've just forgotten my numbers there. Hang on, what's my numbers? It's $1,100. $1,100 this quarter. Yes, I'm hoping to get up to $1,100. Right, I'm hoping up to get to $2,000 a month. That's what I'm trying to aim to get to. Sorry, my brain went a bit fuzzy there. October 21st. To the 22nd, expected Q3 25 earnings. Now, we'll, of course, cover it live, and I'm expecting, very confident, of a very good beat. And now, if we get a very good beat, remember, the actual estimation has dropped. Because of everything else going on in the world, the estimations were dropped, and they're going to beat. It's going to be a very good beat, and I'm expecting 18 to 20% gains on growth by the end of the year. So very, very bullish. That'll outperform the S&P. The S&P is not going to do 18% from now to the end of the year. Not a hope in hell. All right? Never in history has it done that. Anyway, November the 2nd and 4th, US Investor Roadshow. I'd like to cover that on the show. The London Investor Roadshow, 4th to 6th. November the 11th, UBS European Conference in London. November 28th, next ex-dividend date. That's the date I want to be in to get the best payout I've ever had in my life for the next quarter. February 16th, Q4 projected earnings, and we'll be covering that live. Now then, Catalyst. Let's look at this. Now, as we can see, Coca-Cola is going up again. So I bought here this morning, as you know, right down at the very, very bottom. Let me bring that down here. Very, very bottom. On the way down, I bought it here. I've sold these today, and I bought back here, and here we go again. So once we get above these numbers, I'll be trimming again using tax lots and then buying back and acquiring more and more of what I want. Okay, if you've just tuned in, please tap the like button and consider subscribing. Okay, so let's now go over to the rest of it. Coke Zero, sugar and share a Coke relaunch. Zero Sugar continues to deliver double-digit growth, and the marketing push will hit 10 billion packs in 120 plus countries, a big volume mix driver. Alcoholic adjacencies. Partnerships with Molson Coors are expanding spiked brands like Topo, Chico Spirited, and Simply Spiked. While small today, it's an optional upside. Now then, I've got more information than that is what is in the newsletter from Sensei. They are experimenting. The reason why they're experimenting with alcoholic drinks, because it's a very profitable sector, and Coca-Cola want to see if they can do it. Now, they don't have to suddenly start building factories or building breweries or coming up with a drink of their own. No, they are simply buying partnerships and put their name to it. So it's very, very profitable, and they're experimenting very small. I will tell you that even if this is a success, it will not move the needle on Coca-Cola at all. However, if it's a success, they will expand it around the world, and then we could see a major boost upwards if it actually works out. Now, something that didn't work out was Costa Coffee. Costa Coffee strategy. Reports suggest Coca-Cola has considered selling or restructuring its Costa Coffee business, which would unlock value if action is taken. Now, Costa Coffee wasn't a great investment. It's not making them much money at all. In fact, they're losing money on it. They want to get rid of it. And they can get rid of it without actually hurting the stock price at all. That's not why the stock is down, because of this Costa strategy going on. But it will certainly be a catalyst upwards when it's done and shaken off the books. Global marketing scale. Coca-Cola continues to show how it can protect share through pricing power and global campaigns, even when consumer wallets are stretched. Risks. Okay. Risk, currency pressure, currency exposure. Now, this is one of its weaknesses and its strengths. It is a global brand, so it is affected by currency exposure. However, this is something that they've been very, very good with dealing with. So even though it is a risk, currency exposure, they've been able to mitigate it thus far. With over 70% of sales outside North America, a strong US dollar reduces reported earnings. Currently, the US dollar is weakening. So this is a catalyst to move the needle. Health scrutiny. The World Health Organization's cancer research arm classified aspartame as a possible carcinogenic. Now, that is what is in what's in Coke Zero. There's no evidence to support that, but that has been mentioned, a possible aspartame as possibly carcinogenic. Now then, we are going now to something new. We're about to try what's it called? Cane sugar. If you go to Mexico, that's how it's been for a while, but it's going to be coming to America, North America soon. They're going to bring that out in the fall. But this is an issue that's been looked into. Although regulators like the FDA continue to say it's safe at current intake levels, all right, there is that discussion going on. Sugar taxes and regulation. More governments are imposing sugar levies and packaging restrictions, raising costs. Now then, Coca-Cola, if you understand the business, are pretty much tariff exempt because they have their bottling businesses and so on and so forth all around the world, and they make it on site. You don't have to have an issue with tariffs with this business. It's virtually tariff exempt. So another great benefit with owning this business. GLP-1 weight loss drugs. These drugs could reduce liquid calorie consumption long term. A mixed picture for Coke since zero sugar drinks may benefit, but legacy sugary SKUs could suffer. Worth noting. Commodity costs, sweeteners, aluminium and water are ongoing cost pressures. But again, doesn't really affect Coca-Cola too much because of the way they are. Their businesses are spread around the world. They're not having to import stuff and send it around. And as you can see, as I'm talking, here goes Coca-Cola again. Now, once it goes above the 66.8, I will start trimming again because I've just bought lower once again. All the time, I'm trying to get more and more shares at lower and lower prices. So if it happens live on the show, you'll see me trade again. I've done over 70 grand today, and we are just under 600 grand now invested. And I'm actually 34, I think it is, on the list of share allocation to institutions. There are 47 institutions who own Coca-Cola, and I'm 34. Not an institution, but I own more. I'm 34 on the list. Warren Buffett is number one with 400 million. All right, so I guess I would be regarded as an authority on Coca-Cola, I guess. Anyway, what about the bottlers? Coca-Cola doesn't bottle its drinks. Very often people think it does. It doesn't. It's like McDonald's. It's a very profitable brand. It owns the brand, the name. That's handled by independent partners. Some of the biggest are publicly traded. I bet you didn't know that. That some of the bottling companies are actually public companies themselves. You may have seen Coca-Cola European Pacific. You may have seen other stocks that you can buy on the stock market. They are not Coca-Cola. But they are partners of Coca-Cola. All right. So when you buy Coca-Cola, you buy KO stock. All right. Anyway, Coca-Cola European Pacific Partners, their ticker symbol is CCEP, the largest Coke bottler in Europe and Asia Pacific. KO owns about 19%. So you can see it doesn't own the whole thing at 19%. But they pay to use the name and the brand. Coca-Cola FEMSA, KOF, Latin America's biggest bottler, with KO holding 28%. These companies are separate investments. So when you're buying Coca-Cola, like I say, you buy KO, which then benefits from all of these. These companies are separate investments that have been performing very well. Bottlers tend to be more exposed to commodity costs and regional volumes. They do. Coca-Cola does not have that issue. They're all about selling the name, and the name is not vulnerable to commodities or tariffs. While Coca-Cola itself captures the higher margin brand and concentrate economics. This is why when you understand the power of the business, like I do, you start thinking, hang on a minute, this is not about Coca-Cola. This is a great engineering business. Extremely well managed. Street View, what analysts are saying. Analysts continue to frame Coca-Cola as a defensive staple with steady upside, but opinions diverge on how much room the stock really has. Now, a defensive staple means you're always going to buy it, always going to need it, we're always going to have Coca-Cola, right? It's a staple. It's a staple in your budget. All right, as a end user. A defensive play means when there's a downturn and tech, which is risk on, high risk, high growth. When people start trimming, where do they go? They go into defensive plays. So you always want to have a defensive play in your portfolio, which you do have, of course, if you own the S&P 500. It's got growth, defensive, and everything else built in there. But I am all in on one stock at the moment because I've made all my money from the S&P 500. I know, or I believe very strongly, that the S&P is the stock market is going to pop soon. And we're going to go down 10, 20%, and all the money will flood back into defensive. That's how it works. JP Morgan recently reiterated an overweight rating with a $79 target. Right, we're talking 18, 20% here. That's potentially by the end of the year. Highlighting Coca-Cola's reliable organic growth and dividend portfolio profile. Wells Fargo took a more cautious stance, trimming its target from 78 down to 75. But folks, we're at $65 right now. Way, way, way below there, citing near-term consumer headwinds. BNP Paribas remains bullish, keeping an outperform of 83. We're at 65, think about it, among the higher forecasts on the street. And Morgan Stanley also sees upside, maintaining overweight with a target of 81. Now, I look at a lot of analysts, and as well as myself, and I can't see anyone who thinks we're not going to make 10%, which means we're going to outperform the S&P. And we might even outperform our favorite crypto as well, because if we get a downturn, which I think we will, this will outperform your crypto and outperform the S&P 500. So not a bad way of looking at it, is there? On the consensus side, most aggregators cluster Coca-Cola's fair value between 76 and 79. Fair value, we're at 65. TipRanks shows an average target of 79.69 across 16 recent analyst ratings, with estimates spanning 75 to 85. We're at 65, people, plus the 3% dividend. I mean, am I right or am I right? There's a reason why I bought $600,000 worth of Coca-Cola. There's a reason why Warren Buffett has sold none. Takeaway. The street largely agree Coca-Cola is a buy and hold dividend machine, but upside is seen as incremental rather than explosive. Now then, some of you might say, I don't want this, I'm not interested in 20%, I want to make 1,000,000%. All right, carry on. But this is 20%. And then you got your dividend, which is regular, and it compounds over time. Now, I'm not saying, and I've got no intention of buying Coca-Cola and then doing nothing else. I understand the S&P 500 can and does over time outperform Coca-Cola. No question about it. However, in a bubble it doesn't, in a crash it doesn't, and I think we're there. I think we're right on the edge of a crash. And the fact that Coca-Cola has been selling tells me we're also at a crash, because people have been buying madly into the Mag 7 as a final hurrah before it sells off. It's not a matter of if. In my opinion, it's a matter of when. And when it happens, I want to be in at the lowest prices. And then what happens? As we start to rally and I reach the highest prices and everything's making me money, and I'm going to be paying tax, there's no way I can avoid it because I'm making money in all of my positions now. Now I'll be selling at the top and I'll be buying back the S&P. And I'll be buying back my favorite crypto as well. And I'll end up owning a lot more. Remember, it's not about profit today. It's about building a position for profit tomorrow. So, most analysts treat Coca-Cola as a steady compounder to anchor a portfolio. Now, that word is important, a compounder. Very, very important word, that, compounder. You don't notice it until a few years in, and then you start to see the power of compounding interest and compounding portfolio valuation. To anchor a portfolio with ongoing debate over whether its premium valuations leaves enough room for further re-rating. Now, I understand when the stock was 27 times earnings, which it was. Now it's 21. It wasn't great to buy it at 70 plus, but it's great to buy it now, which is why I've been buying it now. This is why I buy, and I've always said, I buy with conviction. When I buy with conviction. I have always said, when I buy heavy with conviction. So, Coca-Cola. It's getting very, very interesting right now. Is the top about to explode? Are we about to see some real fizz in the stock market? I think so. So much so, I have bought very, very heavily, and I'm very happy to do so. Do you agree? Leave me your thoughts in the comments. So, final picture. Pricing power. Price mix growth. Plus 6% up in Q2 is offsetting slight volume declines. Operating margins remain in the mid-30s, even with FX drag. That is industry smashing. Free cash flow was 3.9 billion in 1H, excluding a one-time payment related to Fairlife, keeping the dividend well covered. Coca-Cola. Investor Relations. Dividend yield around 3%, underpinned by stable cash generation. What to expect next quarter? Can Coca-Cola positive pricing without further price erosion? Does Coke Zero Sugar keep delivering a double-digit growth? The answer is yes. I believe so. Any update on Costa Coffee strategy? Yes, I believe they'll deliver that. An FX headwinds? Do they guide more conservatively for FY25? This is Sensei's take on it. This is what Sensei had to say about this. Sensei presented this in his newsletter. If you've not got the newsletter and you want it delivered to you every day, here it is in the link in the chat, and you can also get your very own copy of this every single day. So Coca-Cola isn't a hyper-growth story. It's a quality compounder. However, if you buy it at the right time, people keep saying to me, it's all about time in the market. It is. But they forget it's also about timing the market. I've been trading in and out today, 70 grand today. It was over 100 grand on Friday. I've been improving my positions all the time. It's about getting in and maneuvering to the bottom and getting ready, because when this goes up and does 20%, which it can do with the dividend, it's going to outperform the S&P. It's going to outperform my crypto, or what I had in crypto. No question about it. And then I don't even have to sell, because I've got now a portfolio of $1 million. I don't need to sell. I can just earn a very, very nice dividend with never having to pay tax, never having to worry, and having my portfolio, like Warren Buffett, compound over time. It's a quality compounder. That is the main story here. For retail investors, it's a defensive name that shines during uncertain markets. Well, if you don't think we're an uncertain market, you have no business in being in the stock market right now. High cash flow. Every business wants high cash flow. Reliable dividends. You want reliable dividends. And global pricing power. You want that. The key near-term catalyst is the Q3 earnings released in late October. We'll be covering it live alongside any Costa Coffee headlines. Long-term, the bull case is simple. Coca-Cola keeps converting brand power into cash and returning it to shareholders. That makes it a business buy and own for me. So what do you think? Has Coca-Cola got your fizz up today? Remember, I'm not sponsored by anyone. People keep saying, is this show sponsored by Coca-Cola? I wasn't even talking about Coca-Cola a few weeks ago, but the market wasn't so overheated a few weeks ago. So I'm ready. I've repositioned. I'm about to make more money than I've ever done on my portfolio. So there it is. There's a story of Coca-Cola. Unfortunately, we didn't get to another round of trades. I was unable to share that with you. I wanted to share that with you live on the show, but I've traded about 70 grand today. I can show you that. If I scroll down here, you can see today I've done about 70 grand. There you go, 50, 70. That was at the side of a swimming pool today. As I was doing water aerobics, I was trading $70,000, 1,000 shares of Coca-Cola. And I swapped those for ones I paid a lot. I paid a lot more for, and I swapped them for the cheaper ones, and I bought back, as you can see. I sold 65.93, 66.08, and then bought back 65.86 and 65.81. I improved my position. That is what it's all about. So, am I beating the market today? Well, let's have a look. This is my portfolio. I'm up 0.88 today. Am I beating the market again? The answer is yes. I'm beating the market again. I say it every day. The S&P 500 is now selling off. It's up 0.07. But my portfolio is up 0.88. I have smashed the market today. How's it performing against Bitcoin and Ethereum? Well, Bitcoin is up today, 2%. XRP is up 0.73. I've outperformed XRP today on what is called a bull run. Coca-Cola has outperformed XRP today by trading wisely, the way I've done this. Okay? But remember, these can go down as fast as they came up. They don't produce any money. Whereas my Coca-Cola is going to take me to $1 million. And I wouldn't be surprised if I rank up in the top 20 on the institutions. Now, what do I mean by that? I've got to go because we're running out of time. If you scroll down here, you can see, go into Coca-Cola. When I keep saying that I own as much more than most institutions, and you're probably wondering, what the hell is he talking about? If you scroll down here, and I'll show you hedge funds. Hedge funds are whales. They are institutions. All right. You can see if I scroll here, if I go to the most shares, total shares, so there you go. 400 million is Warren Buffett. Warren Buffett is the biggest investor in the world in Coca-Cola. And I have, currently with my Roth IRA, about 8,200 shares. If you scroll down here, these are the biggest investors in the world. If you scroll down here with total shares, scroll down here, I'm 32 out of 47 on the list. If I go show all, you'll see down here, these are institutions. We've even got, there we go, 8,000 shares there. There you go. So we come across here and you can see these trusts and institutions, I have got more than they have. All right. And we've got institutions now buying more as well. People are starting to buy now. Some are selling, some are buying. As you can see, all the way up to the top, right at the very, very top. There you go. So I'm now more convicted than most, than a lot of institutions, and certainly more than most retail investors. So when I say to you, I never lose, I don't. When I say I'm going to get to $1 million, I will. When I say to you, we're going to get 100,000 subscribers, we did. Now we're going to 1 million, we will. And when I say we'll be the first 1 billion channel in the world, we will. The question is, what are you going to do? You can all hope the stock market is going to go up forever. You can be focusing on the story. Well, it does this, it does that. Everyone's got a story of their favorite asset. But does it earn any money? Does it return money to you, the shareholder? No point saying, for example, if I pick XRP Ripple, does Ripple return it to you, the investor, or do they keep it? Do they keep liquidating? Do they keep dissolving, diluting shares by releasing more crypto? I don't know. What's the story? You decide. But when you invest, you want to know that you are always going to be making money. I'm not interested in a story. I'm interested in value. I'm interested in winning. And I'm interested in doing the right thing for my Lucasades, the people that follow me day in and day out. It's a long-term strategy, but investing always pays. Investing always works if you focus on value. Now, I grew my portfolio from $5,000 to now $290. I'm just off an all-time high when the S&P is down. It's easy to make money. The hard part is to keep it. And that's not my full balance, of course, not even close. That is without margin. If we go to my margin, if we go back to here, you can see my full position here. Let me just go stocks and shares. There you go. Plus what's in my Roth IRA, which is another 50,000. So there you go. I hope to be at 600,000 by the end of the day. That's it from me. Now then, coming up in a couple of moments, we have another business that I detected, that I like, that I think is great. I've bought this, Vertical Aerospace. And I won't be wrong on this one either. This is a 10 to 20x. But just so you all know, I want to be absolutely clear. Do not follow me. Do not follow me because you do not stare at it and read about it all day. You do not talk to CEOs. You do not, you never follow me even when you say you do. You don't understand what I know about the business. So please don't follow me. Just because I'm doing something doesn't mean you should. I'm just sharing with you my real journey. But this is what's coming up next. In a couple of moments, Vaz is going live. He's got a video here for you. You really want to listen to. I really think you'll get something out of this. There it is. It's going live in just a couple of minutes. It'll automatically take you there. Stay with us. It goes live in literally 4 minutes from now. All right, there's the link. So I wish everybody the best. Don't dream. Don't want the stock market to be what it isn't. Look at the balance sheet. Understand what you own. And let me tell you from first-hand experience, when you've got a portfolio where you want it to go down, you know you now own something great. I've never met anyone that's in speculative assets that wants it to go down. They want to see it go up because it doesn't make any money other than the share price that when you sell. I want Coca-Cola to go down because I want to buy more. I want to own more of the business because the business is what I want to own, not the share price. And I can tell you, it feels amazing when you are not shorting a stock. You don't do options. You just own the business. And you're sitting here, in my case, with over $250,000 in margin. So a margin call is always a real potential. And you're actually willing and wanting the business to go down in stock price. It's fantastic. It's a great feeling. So when it goes up, you make money. When it goes down, you buy more of it. It's a wonderful feeling. I wish for Coca-Cola to go down. It's not, it's rallying again, and I might have chance to do some more tax lots live on the show before VAS starts. VAS starts in 3 minutes. So Coca-Cola, let's see if I can do it. Trading, go to here, clear the screen, boom, boom, boom. Go to trade, sell. Here we go again, tax lots, sell in tax lots, click tax lots. Now you can see, when I started buying this, all my tax lots for today aren't showing yet. All of these trades are in the green. All of these now. A few weeks ago, it was all in the red. Down, 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 down. Everyone went, oh my God, you're buying a broken business. Yeah, people actually said that to me. Right? Now look, if we search, there we go. All of these are in the green. They'll all show tomorrow. Now look at this. In the green, in the green, in the green, in the green. Look at this. All of this now is in the green. All of this is in the green. Now then, what I could start doing, and I might be able to do it on the screen with you now if we rally. I don't think we're rallying enough. What I can do is I can click this one here, and this one here, because you don't know, of course it can rally up forever, and that's fine. If it rallies up forever, that's fine. I've got enough below. I'm just trimming to pay off margin. That's all I'm doing. But it's trending down so I can buy some more. So I don't mind selling. So if I sell that now, I will return, you can see at the bottom, for $13,000 into my account. 13 grand. And I will lose $4 on the trade out of 13,000. Well, I'm not going to do that. I don't need to sell for a loss. But you get the idea. And then I can buy back lower. Now, if it carries on going and I've sold these and I could have got more money, it doesn't matter. I've got all of these in the green. And if I take out all these red ones, which are starting to turn green, if I just select all the ones that I do own, all of these, this is how much I actually own that's in the green. That is now below value. If I tick all of these are in the green. These are all going to earn me money. Right. You can see at the bottom of the screen, 124 grand plus 100 I bought today and on Friday. They're the ones down here. That's 224 grand. That's $250,000 if I just kept all the ones that are in the green. Well, that's more than I need. I want to buy the S&P. I want to buy XRP. I want to buy crypto, right? So I could sell all of these. It doesn't matter how high they go. I don't want to sell them for a profit. I simply want to sell them on the way up and then buy the little dip as it goes lower until I go, do you know what? They're all in the green. I've got such a low position. I don't want any more. Now I can buy back the S&P 500. All right. Vaz is about to go live. Let me end this. It wasn't quite enough. It needed to go to about 66.11 for me to start doing that. So that's it from me. Vaz is about to go live with this special now. Come and join me. It's about to start. The link is in the chat. It'll automatically take you there. I hope you've enjoyed this. I hope it helped you. It wasn't to scare you the market's going down the toilet. It was to show you how to make money and how to always win. Right, that's it. Martyn, have a really good strategy. There we go. It's starting now. Said tricks. I haven't got, have I got, oh, it's rallying now. It's pumping now. It is going now, but it's got to go to 11. I'll read all the comments and reply to them on later on. That's it from me. Thank you ever so much indeed. Join me now on this live premiere. I think you're going to enjoy it. I'll see you back later. I've got much more reviews. Tomorrow is a members only day. Loads of reviews tomorrow. Remember, folks, it's easy to make money. The hard part is to keep it. Focus on value. Focus on price. Understand the mechanics of the stock market. Realize when we're in a bubble. Realize what a great business is and what a great business isn't. And it really is simple to make money. And ultimately then, look at that. Look at that. 3.5 grand, 3.2 in one day. I'm smashing the stock market. Not even close now. Not even close. We're about to hit an all-time high. The S&P is going down and I'm absolutely smashing it. There is the S&P going down. There is Coca-Cola. Say what you like, folks. That's it from me. The premiere is starting. I've gone on way too long. Enjoy it. I'm sure you'll have a wonderful, learn loads on this premiere. I'll see you back later. Click above my head, down here, over here. Till next time, take care of yourselves and each other. Stay where you are. It'll take you there right now. I love it. Don't you just love it? I love it.